Good morning, everybody. My name is Cassie Obolero, and I'm one of the operations and training officers in the Office of Sponsored Research. And I'm just going to go ahead and say that and then pass it on to my colleague.
Good morning, everybody. Thank you so much for joining us this morning. And my name is Joyce Ave. I am the second of three operations and training officers in the Office of Sponsored Research. And on that, I'll turn this over to Gladys.
Good morning. There we go. I'm Gladys Villacota. I am the Associate Director at the International Research Support Office. I provide guidance on human resources and international agreements, and I'm happy to work with you guys.
And I'm Phil DiBiase. I'm the manager of the subcontracts team. All right, back to you, Cassie.
All right, before I get started too far, I did want to provide some context for these two training sessions. We realized that that was not done. I didn't do that at the first training session for part one. So I want to make sure to just provide this context now. We and OSR are in specifically the people you see here today, as well as so in OSR and as well as working with some of our other colleagues like Gladys and Joe and Urso, and then including our colleague Kathy. We're in the process of creating and updating our subaward training for our office, for the Office of Sponsored Research, as well as for IGHS staff, department staff, and PIs, as well as others that might be working on this piece, the pieces that we're involved in the subaward process. We've been paying special attention to outgoing subs and international subs and realized that we never, even though IGHS has the ability and the authority to submit the subaward request directly to the Office of Sponsored Research Subcontracts team, we've never provided you with the same level of training that we actually provide the OSR staff that are doing the same process. And we wanted to make sure that you have all of that training. And you can see we have more than just IGHS here because our staff are also interested. We're updating all of our trainings. And so that's why you're seeing it grow. I think that really covers the context and the background. If anyone wants to chime in on my colleagues, please feel free to. But having said that, I also want to say for some housekeeping, we'll share a PDF of today's presentation after the class. It will have all of our notes and links that we discussed today. Feel free to take notes to help your learning, but you don't need to take, extra notes because you will have access to all of our materials as well. And and we're going to post it on YouTube, so you could always watch it as a refresher if you like. And having said that, one other thing, if you have questions, feel free to put them in chat and we'll try to notice them. If you chat the speaker directly, they may not see it. So it's always better to just chat it to all, or at least to someone that we introduced this morning that's not speaking. That's always the best way to handle it. What we're going to try to get through today is we hope that you're going to know the differences between cost reimbursable and fixed amount budgets, that you'll understand the concept of cost sharing, that you'll know how to process indirect costs on foreign subawards, and that you'll be aware of special considerations when working with international subrecipients. Before we do that, before we really jump in, I want to do kind of a little knowledge check. We're just going to apply some of the concepts that we talked about in part one, some of those basic fundamental concepts. So if you missed that session, but you've been working on subawards, I think you should be okay. But I just launched a poll. It's 4 questions. So please look at the scenario that you have on your screen. All the scenarios you'll see today are the ones that I shared with you before class. You are not expected to do anything before class, but you did have access to those, so you won't be surprised. In this scenario, you receive an award from NIH that includes a subaward to Quantum Leap Enterprises located in Israel. After reviewing the proposal, you realize that the subaward was budgeted in the proposal as a procurement agreement, but it's been awarded by the sponsor as a subaward. You look at it and you agree this should be a subaward. The award requires monthly billing and financial reporting. There's one, select the single choice. So select the issues below that you may encounter due to incorrect agreement classification. The second question is not showing on the screen, but it's on the poll, and we'll get to it on the next slide. When the subaward is ready to be issued, who is responsible for negotiating the terms and conditions of the subaward agreement on behalf of the university? So who's responsible for negotiating the terms and the conditions of the subaward agreement? IGHS or the OSR staff that worked on the award are responsible for performing compliance checks on the subaward. Is this true or false? And then the fourth question is, due to capacity issues, Quantum Leap Enterprises is not able to support independent contractors. What office should you reach out to for guidance? You said all of the above. That is correct. It's definitely possible that there's going to be incorrect calculation of the indirect cost. The proposal stage that's going to require some rebudgeting, and we'll talk about indirect costs a little bit later, but if you picked up on that, you're so right. Also, Quantum Leap Enterprises may not be able to comply with flow down terms and conditions, and delaying the start of the subaward may result in major delays in project reporting because of the award requiring the monthly billing and financial reporting. That's really what can happen there. The second question is who's responsible for negotiating the terms and conditions of the subaward? If you said the OSR subcontracts team, you are correct. They are the people who can negotiate those terms and conditions on behalf of the university. And that's why we submit our subaward request to them, because they're the ones with that ability, that authority. Three, IGHS and OSR staff that worked on the award are responsible for performing compliance checks on the subaward. That's false. The OSR subcontracts team does that as part of their process. And when you submit that request form to them, that's part of, and all of the request materials, that's part of what they're looking at. We talked about that last time, visual compliance checks or some visual audit, something like that. Did I say it right, Philip? What is it?
It's visual compliance. It's the restricted party screening and export control.
Thank you. Yeah. Okay, and then number 4, URSO is who you should contact when you need some guidance regarding alternate hiring methods because you cannot hire independent contractors or Quantum Leap cannot. Then URSO is the office you would look out to. All right, so somebody's asking, they don't understand why number 3 is false. And that is because as part of the process, when you submit your outgoing subaward request to the Office of Sponsor, to the subcontracts team in OSR, they are the party that's going to perform all of those compliance checks.
Yeah, see, I think what Karen's trying to find out, it says OSR staff. It also, Karen, says IGHS, and
it says OSR staff that worked on the award. So what that means is someone on the proposals and grants team or the contracts and awards team that worked on that award. That's who we were classifying in here. So then I understand Karen's question and why she was wondering why that was wrong. I get why that confused you. So thank you for that, so we could provide that clarification. Yeah. All right, well, thank you for doing that. That was a little way for us to just kind of think about what we talked about in those fundamental concepts to get us going with what we want to talk about today. And Gladys, do you want to say any more about URSO in this situation?
Hi, Cassie. URSO focuses a lot on international laws, and so we do focus specifically on international hiring. For contracts, you should go to your subcontract rep. We can provide focus on any operational issues in the country. We can look at a scope of work maybe, but the terms and conditions are set by UCSF.
Great. Thank you, Gladys. Wonderful. We want to make sure everybody knows about their resources that they have. So that's a big kind of piece today too. All right. So now let's talk about budgeting. The materials you provide with your subaward request are going to depend on the actual action in that subaward. Is it a new request? Is it an amendment? And what type of amendment it is? This class does not cover that in great detail as it's covered in the SRF e-course, which you're required to complete before you can submit an outgoing subaward request to the OSR subcontracts team. So today we're going to talk about topics to help you understand the terms and concepts associated with those subaward requests. And OSR, our staff assists PIs in budget preparation. PIs and departments provide line items and costs. And we in OSR review and prepare the budget for allowability and accuracy and inclusion of our UCSF indirect cost. We also provide the PI a budget justification with UCSF approved language that should not be changed. There is some areas that they can adjust, of course, but there's language in there about our recharge rates and such that should not be changed. And the PI should provide the information regarding the items in relation of how they relate to the project, including key personnel roles. This is all ideal. I train in ideal types. We understand we don't always work in the ideal world, but again, I train in ideal types. Let's start by looking at the different budget types. When you're looking at a subaward, you'll need to consider if it's a cost reimbursable or a fixed amount subaward. Detailed budgets are required for cost reimbursable subawards when you're doing a new request or certain amendments. The budget must comply with the sponsored guidelines and submission requirements and at least provide costs by major budget categories, including personnel, supplies, travel, equipment, consultant costs, etc. Personnel should be detailed on the budget and include the percent effort, calendar months, and it should follow the sponsor guidelines. So the sponsor will usually tell you how that should be, how you should be showing the effort, and the amount of salary and fringe benefits requested should also be shown. If the subrecipient personnel are providing measurable effort and not drawing salary from the subaward, include the amounts of mandatory or voluntary committed cost sharing in the request and the budget justification. We'll talk about cost sharing a little bit more in a moment, but voluntary committed cost sharing on federal subawards becomes a binding requirement of the federal award and requires tracking and reporting by the subrecipient. If the subrecipient PI may not draw salary from the subaward, this must be detailed in the budget justification. And an example of this would be the HHMI investigators that are employees of HHMI. It also needs to include the applicable indirect cost rate and base. The budget should always follow the sponsored guidelines. If there are none, we do not require a specific template be used, but we do have a generic budget template on our website, and I've also included a link to the PHS 398 budget forms. And there's the link to our budget justification. We go into budget justifications, I think day 3 of RA 101, and we're always updating, well, not always, but we are working on updates to those materials, I think. I know we recently updated them. So if you haven't taken RA 101 day 3 in a while and you're interested in learning more about budget justifications, I would encourage you to do that. They're really, really important piece of not just the subaward, but our proposals. All right, there's my thing about justifications. So that is a cost reimbursable budget. And remember, cost reimbursable budgets provide reimbursement up to an authorized budget amount, and they have this detailed budget. For subawards, we must provide a detailed budget. There's also fixed amount budgets, and these include fixed rate, fixed price. We call them fixed amount budgets. They're in that category. And they provide reimbursement based on defined firm fixed amount or deliverables. There's a link here to some fixed rate guidance that Philip and the subaward team put together that's really great. Some examples of fixed amount budgets are clinical trials, installments, when you see the installment budgets, milestones, prepayments, and units of service. Budget should describe the payment triggers and dates. They include a milestone or a payment schedule. do not send a detailed budget with these fixed rate budgets. You'll see if you look at this example and your terms of reimbursement, it's really including that scope of what they're being paid for and what's being done. All right, cost sharing. Cost sharing is another very, very important piece of what we talk about in budget preparation, not just for subawards, but it's really especially important for subawards. I have links on the bottom of these pages to my source material. You'll note I'm sourcing outside of our office for a lot of this information. Specifically, I go to the controller's office. But cost sharing is defined as the portion of the sponsored project costs that are not paid by that sponsor. They're not charged to that sponsor on that project. These could include supplements for externally sponsored projects. They're not reimbursed by the sponsor or charged to the sponsored project. They're supported by university funds, and they may be expressed in the form of a contribution of effort or other cost. Remember, the word in kind means cost sharing, usually, right? Like unless they're using it in some other way or they're trying to say they're leveraging, in kind actually is a key word you'll see. And I like to say that because that's important. And they're quantified in the proposal narrative, the budget justification, or in the award document. They're quantified somewhere. Cost sharing commitments on sponsored projects, proposals, or awards should be limited to situations where it is in the best interest of the university. Should not just be done just because. And also, it's important that federal sponsors do not include cost sharing in review criteria unless otherwise noted somewhere. Cost sharing, as we mentioned, they require additional oversight, management, and reporting, and are auditable. Departments and PIs must identify the sources of funds, such as the account and the fund, for that committed cost sharing for both mandatory and voluntary at the time of the submission of the application to the sponsor, and must confirm this information when they accept the award. PIs must ensure that cost share transactions are reported properly and timely on general ledgers. Now we have different types of cost sharing we talk about. We have mandatory committed cost sharing, voluntary committed cost sharing, and voluntary uncommitted cost sharing. Cost share commitments, mandatory and voluntary, require approval in accordance with the campus procedures prior to finalization of the proposal. The federal government does not expect voluntary committed cost sharing in proposals. It cannot be used as a factor during the merit review of applications or proposals unless it is both in accordance with the federal awarding agency's regulations and specified in the notice or funding opportunity. Let's break it down. What are these types of cost sharing? When cost share is required as part of the notice of funding opportunity, the cost share is considered mandatory and must be tracked and reported. Mandatory cost sharing is driven by the sponsor. It's stated somewhere by the sponsor that it is required. It's stated in the FOA or their sponsor guidelines. It's stated somewhere. It's very clear. Effort and other costs are quantified and documented in the award or the proposal, and it's auditable. It must be allowable, so the costs that are being cost sharing must be allowable costs on that project, and it must be monitored and documented. The mandatory cost sharing policy of the sponsor or the university's determination that such commitments are necessary to ensure the success of specific competitive proposals may be considered, but should not be the sole or overriding determining factor in concluding that the commitment is in the best interest of the university. PIs and the department should refrain from making commitments to cost share whenever possible. The reporting and audit requirements for mandatory committed and voluntary committed cost sharing they require us to track the actual commitment and funding for a sponsored project against the committed amount in that contract. Cost sharing will only be tracked if there is a compliance requirement. To accomplish the monitoring requirements, an unrestricted cost sharing fund must be used. And allowing the research administration system to ignore this activity for billing purposes while still using the same RAS project. In addition, unique cost sharing expense accounts will be used to monitor the commitment activity. You can see cost sharing is not just an easy thing. You can't just put it in your budget and then say, oh, there it goes. There's a lot that goes along with it, and you have to think about what type of cost sharing it is as well. And it's not always clear. So we know sometimes it's a little gray. But there are keywords you can look for, like in kind, or just looking when somebody's committing effort and it's not being covered by the grant, like something like that. Voluntary committed cost sharing is always discouraged because it depreciates our F&A. We're not really sure when voluntary cost sharing, committed cost sharing is appropriate, but we do know what it means. So there's no sponsor terms and conditions or sponsor statutory obligations related to cost sharing. There's nothing that's written saying that it is required. There's nothing saying that cost sharing should be there. The federal government does not expect voluntary committed cost sharing in proposals. I already mentioned it cannot be used as a review criteria. Again, it's not required by the sponsor. And effort and other costs are quantified and documented in the award or proposal. Just like I mentioned with mandatory committed, with voluntary committed, that effort or whatever's being cost shared is also, it's documented somewhere in the proposal or award document. It's auditable. The reporting and audit requirements for mandatory are told you. It's the same thing, right? The reporting is that they're going to have to look and make sure that what is being spent matches what was budgeted in that contract, that contracted amount. And again, unrestricted funds need to be used. This is monitored and documented. Voluntary uncommitted cost sharing is not required by the sponsor. Just like voluntary committed, it's not required by the sponsor. It's not noted anywhere that they require it. Effort and other costs are not quantified and documented in the award or proposal. But effort or other costs provided after the award were above what was awarded. Does that make sense? So like, I had to read that a couple times myself before I put it into just like a short phrase. Effort or other costs provided, whatever was provided after the award, is an amount above what was awarded. Voluntary uncommitted cost sharing is not tracked. It is best described, for example, as an overlap of grant activities with university duties, such as the PD or PI of an institutional training award on a T32 or a mentor career development awards. They don't have effort or salary on the award because it overlaps with university duties to train and educate. So that's an example of this untracked voluntary uncommitted cost sharing. If Shelby wants to chime in, she has a great comment. So Shelby, please do.
Good morning. Just a quick comment on the cost sharing. We, Cassie mentioned there were some audit implications for cost sharing. And in fact, the UCSF audit team did engage in some audit activity last year on cost sharing and had provided a report to OSR on some findings and some opportunities for improvement. So that is on our radar for continuous improvement this fiscal year. And, these are the audit efforts to kind of improve in this area include things like this, like training, making sure we're all informed on the risks and the rules and how to engage in cost sharing. So just stay tuned. I mentioned it just because it's, we're talking about it right now, but don't be surprised if you start to hear additional training and process improvement initiatives in the upcoming year. So it's a very important topic and definitely on radar with UCSF audit.
All right. So that's what we're going to talk about, cost sharing. And it sounds like we might all be getting some more training in cost sharing coming up. I'm looking forward to that. Cost sharing is always a complicated beast. Complicated beast. Okay, so now I'm going to move on to working capital advances. As you can see, I've put all the budgeting things together, or most of them, and kind of grouped them together so we could look at them in a whole. So far we've looked at our budget types, our cost reimbursable and fixed rate budgets, and we've talked about cost sharing. Now let's talk about working capital advances, specifically on foreign subawards. Federal sponsors allow the PTE, the flow through entity, or the pass through entity, to provide cash on a working capital basis to non-federal subrecipients. UCSF limits advances to foreign subrecipients in resource-constrained countries. The maximum allowed amount is 2 months of the annual amount plus the purchase of any equipment for that sub. So if you have a sub award that's $100,000 annually and they're not purchasing any equipment up front, they could only request 2 months worth of that. So you would take 100,000 divided by 12, multiply it by 2, and see what you get. And that's how you would come up with that maximum amount. And that's a hint because we have an activity. So I just gave you the formula for that. So there's a hint. All right. And then also we have resources because we know that capital advances can be confusing, and there's some detailed instructions on how to handle capital advances. And there's also some FAQs on our website. Working capital advances should be reconciled. The spending should be reconciled each year. You adjust the advance request amount if there are funds remaining at the end of the year. That's how it's reconciled. And I have a link to the Code of Federal Regulations here that will help you with that.
Hey, Cassie, can I just add about the reconciliation?
Yes.
That's the best practice from CGA, is that it gets reconciled every year. Upon talking with CGA, we all understand that's not necessarily how it happens with all of our subrecipients. So just be aware if they're not reconciling each year, that's totally okay. We won't give them 2 more additional months. We just need to know how much is left over and then restore the working capital advance back to 2 months. So it is important to know how much funding of the working capital advance is still on hand at the site.
Great. Thank you, Philip. I put a scenario on the screen. There are, again, 4 questions, and I've listed them, just the questions off to the side here. So in this case, you worked with, also bonus point to anybody who can figure out my motivation for this scenario, and the instructors don't count. All right, so you worked with Dr. Adam, a professor of pulmonology, to accept and set up an NIH award, which includes a subaward to a foreign university, Ethera University. Dr. Adams' award, the prime award, starts on July 1st, 2022, and ends on June 31st, 2027. The subaward will begin on July 1st, 2022, and end on June 30, 2023. It's that first year. Dr. Adora of Ethera University will obtain lung tissue samples of human subjects that are able to live in climates with less oxygen than normally tolerated by humans, and then control samples from human subjects that display the expected effects of those low oxygen levels. Dr. Adora is going to compare the lung tissue samples of the 2 groups to identify anomalies for further study. And so you can see the subaward by what she's doing. That's clearly a subaward based on everything we've learned. Dr. Adora will spend 10% annual effort on the project, but her salary and benefits will not be charged to the project. Dr. Adora at Ethera University has requested a working capital advance of $200,000 to collect the lung tissue samples. The remainder of the award is $800,000. So the award is $800,000, not the remainder of it. Think about it, that award, the subaward is $800,000, and the award advance is for $200,000. And the project will be reimbursed based on actual expenses of the project. Okay. So for the first one, if you said cost reimbursable, you are correct. And the key word, which most people got. And the key word with that cost reimbursable, as I said, the project was going to be paid, reimbursed on actual expenses. So that's kind of your key word. The budget does involve a working capital advance of that $200,000. But no, it's not under the threshold. If you take $800,000 and divide that by 12 and multiply that by 2, you get just about, I'm going to round it, just about a little over $133,000. It's $133,330. Our request amount, our advance was $200,000. That is over those 2 months. And there was no purchase of equipment. So your answer there is going to be no, it is not under the threshold. Is cost sharing described? Yes. Cost sharing of the subaward PI's effort. So if you said yes, you were right. And just we'll go back and look at that scenario. And we can see here on the scenario that we have the second, where's it at? Where it says Dr. Adora. So it's down towards the bottom. Let me get my annotate up and I'll show you. Because some people did miss the cost sharing. So Dr. Adora will spend 10% annual effort on the project, but her salary and benefits will not be charged. That is cost sharing. And you don't know what kind of cost sharing it is because I didn't give you enough information for that. So your working capital advance is going to be when you're providing cash, you're providing funding in advance. A flow through entity or pass through entity, PTE means pass through entity. So in this case, if UCSF was say we had in one of my examples, like Quantum Leap, we had this award from NIH that we were putting out a sub-award to Quantum Leap. We are the flow through or the pass through entity, the PTE. The indirect cost rate and base applied to the sub-award based or the sub-award are going to be based on sponsor policy. For NIH and most other federal awards, 8% modified total direct cost minus tuition and related fees, direct expenditures for equipment, and sub-awards greater than $25,000. And then, except for the American University of Beirut and WHO, they may apply their negotiated rate. So that's kind of for like most of our federal sponsors, what we see. CDC and other HHS agencies do not allow indirect cost. So then that's your CDC and other agencies, do not allow indirect cost. Then for other sponsors like nonprofit sponsors, they may be allowed to use their negotiated rate if they have one, or they could do the diminished rate of 10% if that's allowed by the sponsor. And again, we always have to read sponsor policies to see what they specifically allow. And I'm not talking about MCAs because all of our UC campuses are not foreign, so I don't need to cover that bit today. If you want to learn about that, though, feel free to come to our other sessions. We have monthly budget training. We go over that. So let's look at supplements. So I'm talking about how we apply indirects on supplements. It can be kind of a gray area. It depends on how the award or the subaward is processed and set up. And if I don't explain this right, I want Philip to chime in, okay? Basically, though, if there's a new SC number, you need to reapply those indirect costs. You're going to apply it like it was a new subaward. In this case, you have so if you need a separate project ID for tracking, then that requires a new SC number. Therefore, it would need to be treated as a new subaward. Separate sponsor funding source accounts require new SCs too. So if you get an award from the NIH 1 year, a subaward, and the next year, or it's like the scopes changed or something, and NIH changed their source of funding, then that's a new subaward. And you have to treat it, it's a supplement, and you have to apply the indirects as a new subaward. If you're using the same SC number, we do not need to reapply those indirects when applying the MTDC federal definition if over 25,000, because there's, we apply it to the first 25,000 of all subs. Did I get it?
Cassie, I would just add, yes, you did. I would just add that when you're preparing a budget to be submitted to the sponsor and you're not sure how it's going to be set up, or how it's going to be managed, or how the sponsor is going to award it, definitely go ahead and add in indirects on the first 25,000. If the federal agency cuts the indirects, we can use that as backup justification as to why we are not collecting indirects, even if we set up a new SE number. So best practice is still to budget the indirects on the first 25,000 of the sub for a supplement.
Perfect. Thank you, Philip. That is great. Okay, I wanted to talk about that. It's important to know. We've had this come up before, so if you learned something, don't feel good about that, because we all have learned this process together. And if you came from another institution, even if it was another UC campus, I always say we do things different at all the campuses. So you have to learn each campus's way of doing everything. And this is not an exception to that. So make sure you always learn. The new source of funding thing, though, that's going to hold true, I think, no matter where you work. All right, I have another activity for us, and I want to just get us thinking about how to calculate indirect costs on foreign subawards. There's a couple questions coming up where you may want to use your calculator, but I'm trying not to make them very difficult math-wise, because I don't like to do math on the fly. All right, so in this case, you can see our kind of budget information over to the left. So the pass-through entity is UCSF. We're getting an award from NIH. Our applicable F&A rate for this project is 61.5%. Etheria University is a foreign entity. They're in a separate galaxy. Like, they're not even on this planet. So they definitely are foreign. And their subrecipient indirect cost base is 200,000. Their total direct cost is 300,000. And I just reminded you of NIH's policy. What F&A rate and base should be applied to the subaward in the prime budget? So in the prime budget, what F&A rate should we be using when it relates to the sub and our budget, our UCSF budget? So if you said 61.5% to the portion of the subaward in excess of 25,000, you're right, because the question was, what F&A rate should we be using in our budget, in the prime budget, not in the subaward budget? So having said that, let me ask you a different question. And this is asking, what should we do? What should we be applying to the subaward budget? Same question, but as it relates to the subaward. This time, it's our 8%. So this one, or what are the subrecipients' indirect costs? Yeah, so remember their indirect cost base is 200,000. And what is that NIH policy? What is that NIH policy? The answer is going to be 16,000. And that's because their indirect cost base was 200,000. So we multiply that by 8%. If you did 20,000, that's because you did it off of their total direct cost. So, and I gave you their indirect cost base. All right, so the next question is, what are their total costs of the subrecipient? What is the subrecipient's total cost? If they're, you have the information over here, and we know that their indirects are 16,000. What number do you add that to get their project cost? Okay. So their total project costs are $316,000 because we add their indirects to their total directs. You don't add it to their base because then you wouldn't be including their exclusions. Their exclusions were already taken out. So that is the answer there. Okay. Now, let's move on. What are the indirect costs on the UCSF award associated with this project? Remember that, so we're going to charge 61.5%. We're going to charge our rate, right? Or do we charge 8%? We talked about this earlier. It was our first question. What are we doing with their cost on our project? What's our indirect cost we're going to get to UCSF? Just related to the subaward. I didn't give you any of the other budget things. That answer is $15,375, but because we're going to take their total cost and we're going to apply indirects to the first 25K of their total cost. This is really the last one related to this scenario, but it's super important to think about this. You know, when we did the proposal, we budgeted as a subaward, but it should have been a procurement agreement. And the total cost would be $300,000 because then they wouldn't be getting indirects. So think about it like that. So $300,000. What if this would have been a procurement agreement? What would the UCSF indirects have been? If you said $184,500, you were correct, because we would charge indirects. We'd apply indirects on the full cost of a procurement agreement. That would not be treated the same as a subaward. And we want to pull that out because it really, really brings out why it's so important to have that proper classification in the beginning of the project. And we know it's not always possible, but it's important to really, really try to get that right so that you have the amount that you need for the award. And if it's unclear, I would always recommend budgeting it for the higher so that you make sure you have your indirects. All right. So that covers what I want to talk about for budgeting. I want to move into subaward invoicing. So I want to look about subaward invoicing, and I really want to point out that OSR is not really involved in the subaward invoicing process, but we want to make sure that we provide you with the resources that we're aware of and the information that we do have and where we can provide more resources and such. So ideally, at the proposal stage, the PI and the department are determining the subaward classification and the budget type. Is it a subaward or not? Is it cost reimbursable? Is it fixed price? You issue the subaward request. You submit it to the OSR subcontracts team. And if there are any non-standard invoicing terms, you want to be sure to call them out. You can put them in the comments section of your SRF. So that's great. Please call out any non-standing invoicing or other terms that our subcontracts team should be aware of. It'll really, really help expedite the process, and just I think it'll work a lot better if we can all help each other out with that. And then when you get the invoice receipt, the PI of the department obtain the invoice signature approval through DocuSign, and they review and reconcile that invoice. Then they submit the approved invoice for payment to the supply chain accounts payable, and accounts payable processes and pays that invoice. I got this from the controller's website. There's a link to their page right there. Now, there are some standards for invoicing, and I also want to mention that we tried to include Heidi and Ellen in this conversation as well to make sure that we help IGHS know their specific kind of standards too and things that relate to them. Because again, OSR isn't always involved. This is really contracts and grants accounting and accounts payable. It's not so much something that we do. But there are some standards that we know of, and a lot of this I got from their website again. For invoice standards, there should be sufficient detail to compare to the budget, allowable cost, and scientific progress. There should be the indirect cost rate, and so the indirect cost rate needs to be indicated and itemized separately from the direct costs. They need to be able to see what's indirect cost and what are direct cost. The working capital advance reconciliation, if applicable, like we talked about earlier, and the PI approval and certification if federal funding. There are some invoice templates that are available to you. The first one is a generic kind of one. It includes the basic for federal, non-federal, and a sub with a capital advance. The second is the international subcontract invoice template that I believe was designed with y'all in mind and your needs. And then there's another one that's been modified for cost sharing that I got from IGHS. So those are all the links to them there, and we wanted to make them available to you. I really encourage you to look at the Contracts and Grants Accounting site and go through their how-to guides and their classes and such. They have some really, really great materials on this. I mentioned, though, that the invoices need to have sufficient detail to compare the budget, allowable cost, and scientific progress for invoice reconciliation. When you're looking at cost reimbursable budgets, and I got this from Heidi and Ellen, so I want to make sure IGHS knows this, that I got this from your group. For federal awards, there should be you should have a general ledger, time and effort report, and receipts that the subrecipient is not subject to the single audit. This can be requested as well if the subrecipient is subject to the single audit. For non-federal, you want to have general ledger and receipts that the subrecipient is not subject to single audit. Again, those receipts can be requested if they are subject. For fixed amounts, there needs to be completion of deliverable and the scope of work tied to the payment triggers. I mentioned if you have non-standard invoicing terms, we need to know about those because it's really helpful if you can help call those out for our subcontracts team. We would like you to review the subrecipient materials, including the scopes of work, and again, add as a comment in the SRF. I'm talking about specifically right now for invoicing terms, but I think this would go for any non-standard term or condition. And reasonable requests can be included in the sub-award agreement if the department agrees to comply. Yeah, I think that probably covers that. And then this is an example of why you can see why it's so important to include these, to recognize these terms up front and call them out to our subcontracts team and get them included in the agreement, because there could be terms like such as here, there's a quarterly narrative reports due, and that requires final estimated invoices as well. So you can see that there's a lot here that might be hard for the PI of the department to comply with, especially these quarterly narrative reports. You have to, make sure your PI is aware of them, the department's aware of them, whoever needs to comply with them, and call them out to our team when you're submitting that sub-award request. We have some tips for sub-award invoicing for international sub-awards. Again, provide sufficient detail, use a template. Consider foreign currency conversion. Keep that in mind. If the subrecipient wants different terms, include those in the comments. And remember that the subcontracts team is the authorized university representative to negotiate terms and conditions, meaning the OSR subcontracts team is the group that can, on behalf of the university, accept these terms and conditions, and they would need to include that in the agreement. All right, so now that we've talked about invoicing, I just have a couple questions for you. Let's say you get this payment schedule. So you're reviewing a subrecipient scope of work for a sub-award on a CDC funded award, and you notice the following terms. So it's talking about invoicing every 3 months based on actual expenses. I'm going to read through that. And then the UCSF subaward template language is different. You'll see that that's listed below. Who may accept this term on behalf of the university, and how should you alert the OSR subcontracts team of this non-standard term? So our OSR subcontracts team, they're our negotiator. And almost everyone got this one right as well. You want just include that non-standard term as a comment in the SRF, and that will call it out to us.
Although, Cassie, I would definitely say if somebody has a question before submitting the SRF, number 2 would also work. Email the central OSR to request their review. Happy to review before receiving the request. Because you could
For
be
a non-standard term.
Yeah, you could be collecting information and still working on stuff, and something comes up. Happy to review and have those conversations beforehand.
And would they just email the general box?
Yeah, that's usually best.
Okay, great. And we have that in our notes at the end in our resources.
So we're going to go over special considerations when you're dealing with international subrecipients. And the first thing we're going to cover are the terms and conditions. Some things that may stand out in the terms and conditions because you're dealing with foreign entities. So first, because of their direct revenue stream, remember every year I talk about the appropriations and how money gets appropriated to all of the agencies that do have federal support assistance, provide federal assistance support programs. Well, because their revenue, their direct revenue stream is not intended for assistance support programs, some international organizations such as the World Health Organization and other United Nations organizations may claim they're not subject to the federal terms of award. If they are subrecipients on a federal award, they're receiving funds from a different revenue stream now. So it's revenue that's supporting federal assistance programs. So therefore, the terms and conditions of that federal award do flow through to them, and they are bound to that for spending those dollars. So that's one thing that may be of confusion, but this is I like everybody to understand. Know your revenue stream and what revenue you're working with, and that way you can explain to the entity why they must adhere to the federal terms and conditions of a federal award that's supporting an assistance. Number 2 is governing law, where you want to reach out for help because UC's risk coverage may not extend to some of these foreign countries. For example, UC litigation insurance does not cover litigation in other jurisdictions where the contract specifically states a jurisdiction not in California. So at UC, a lot of our risk protections are focused in the state of California, and when we leave that jurisdiction, we're vulnerable to the laws of the other party. Number 3 is alternative dispute resolution. So again, arbitration or mediation in foreign countries might require travel to that country to resolve. Hiring an attorney in that country who's familiar with the country's laws. This creates additional unforeseen costs, so it's risk. Also, number 4, insurance. So rules may vary in different countries. For example, who's responsible for coverage? There may be some subrecipients and contractors in a country where they're not required to carry insurance. Well, this would conflict with the university's policy. Payment terms, number 5. Some foreign contractors may want to include a clause for not paying on time or insert non-standard payment terms. So it's always good to keep an eye out for this. These are all the strange things that happen. Here's a good reason for thoroughly reviewing the scope of work. Some contractors may embed the terms and conditions, their terms and conditions, into their scope of work. And this does happen. It usually happens with the state of California, but keep an eye on that scope of work. One of the things we want to stress today is reviewing the scope of work. If something's not right, if something's missing, question it. And then always consult with the, or if you have questions regarding contracting in another country, please reach out to Ursula. Thank you. So vendor agreements or foreign currency conversion. Vendor and service agreements. When purchasing vendor services, it's considered an in-country cost. So costs are paid to a contractor in the local currency and not tied to US dollars. Our sub-award costs are paid in US dollars though. So we put down the currency converter that is recommended by CGA. Invoice, the subrecipient would invoice the average and published rate the last day of the month invoice. So UCSF, if there is, usually there's fluctuation in currency conversion, UCSF will consider covering the difference, but this is a determination that would be made by CGA. Slide. So this next slide, back in lessons learned from day one training, it's important to thoroughly review the scope of work and determining the correct agreement type early. So we gave you this kind of quick guide to determine a subaward versus procurement or consultant. We added a couple important points to consider for foreign contractors here. So there are some countries that prohibit contractors from management or supervisory responsibilities. So this is where it's really important to scrutinize your scope of work carefully and consulting with the principal investigator for clarification of the syntax. Direct. These words may be taken as a management or supervisory responsibility. Some countries charge withholding tax on contractor fees. UCSF cannot pay foreign withholding taxes. So play it safe. Consult with the International Research Support Office when you're dealing with a country where you don't know what the laws are, what the tax laws are. The principal investigator should never be negotiating salaries and benefits. So for all agreement types, salaries and benefits paid to either the contractor or to the contractor staff is the responsibility of the contractor. So therefore, there should be no negotiation going on with regard to salaries or benefits. If we are negotiating salary and benefits, then we're negotiating with an employee or a future employee, not a contractor. So any negotiation of salary and benefit should be done by an authority at the university that has the power to do so. So take a good look at this little tip sheet, because we're going to look at some scopes of work. So here we have a scope of work for a vendor agreement to go Ingaway Graphics containing the following statement. So the period of performance is September 1st, 2022 through August 31st of 2023. During this time, the vendor will complete graphics for the project website. UCSF will cover health insurance up to 30 working days of paid vacation leave the vendor must communicate lead time to UCSF's PI at least 2 weeks in advance with work plan coverage to ensure contracted work is uninterrupted. Unused vacation days are not subject to payment and will be surrendered at the end of the period of performance. So after reading through this, does this section of scope of work do? So in this case, those of you who said yes, UCSF PI is agreeing to vacation and health benefits, treating the vendor as an employee, any salary benefits should be covered by that vendor, not by UC. So those of you who selected number 3 are correct. That was easy. Let's go to the next scope of work. So this scope of work is for a Nairobi-based independent contractor, Dr. I Know How. And it reads as follows. Dr. I Know How will provide expert guidance on study implementation, review, and provide technical feedback on data requests as needed. Dr. I Know How will prepare and oversee UCSF team to effectively collect and analyze study data and assist with providing necessary data for manuscript development and supplemental grant applications. So read through this again carefully and let me know if this is an issue. Yeah, is Dr. I Know How co-authoring a manuscript, or is Dr. I Know How consultant providing advisory service only, exercising expertise in collecting and analyzing study data? Or is Dr. I Know How responsible for the conduct of study activities that may participate as co-author? Or Dr. I Know How, does it seem that he may be supervising the UCSF team in data collection and analysis for the study and should be treated as an employee? So those of you who selected answer number 3, this is where we want to scrutinize the syntax used in Dr. I Know How's scope of work. So Dr. I Know How is overseeing UCSF staff in data collection and analysis. So this could be seen as supervisory role. This is where you'll want to sit down with the principal investigator and go over the wording used in the scope of work to make sure that all Dr. I Know How is doing is providing advisory services and not supervising our staff. Those of you who selected yes, Dr. I Know How is responsible for the conduct of the study activities and may participate as co-author, and this should be a subaward. There's a small chance if there is programmatic responsibility on Dr. I Know How's part, and Dr. I Know How is providing measurable effort for the conduct of a portion of UC's work, what UC is responsible for providing. So, but I would have said maybe yes to number 1, Dr. I Know How would be co-authoring a manuscript. I would get clarification on any work in publishing from the principal investigator. So there are some, like weak points in here, but the strongest one we wanted to bring out was overseeing can be seen as supervising. Directing can be seen as supervising. Leading can be seen as supervising as well. So be careful of the words used in the scope of work and get clarification. So let's try the next scope of work. So principal investigator, Thor, has developed the scope of work for Dr. Strange, a Nigerian national. Under the scope of work, Dr. Strange would serve as an advisor on best practices in mystic arts in Nigeria. The scope of work is clearly an independent contractor scope of work. The scope of work has clear deliverables. UCSF does not exert control over how the contractor completes the deliverables, and professional fees are inclusive and of all costs related to the completion of the work and are tied to deliverables. Nigeria has a mandatory 5% with all independent contractor agreement. The scope of work has an anticipated start date of October 1st, but the paperwork could not be completed until November 15th. The PI wants to have the contractor start work on October 1st and has informed the contractor they could start work without a contract. So, do you feel there are issues here? And how would you proceed to initiate the independent contractor agreement? So would you go ahead and initiate a requisition and bear buys? Would you want to forward the scope of work to the International Research Support Office for consultation? Or should this be a sub-award and should you prepare a SRF? Or would you authorize work to begin now to meet the deadlines? So those of you who picked number 2, forward the scope of work to the International Research Support Office for consultation are correct. And I'm glad nobody picked authorized work to begin to meet the deadlines. We should not take into account or let the timeline force us to do something that would create great risk. So in this case, we wouldn't have been able to accept the contract or to work with the contract because UCSF cannot pay withholding tax on contractor fees. So we would have to seek some type of resolution to work with this. So if we move on to the next, on this one, we wanted to bring this to your attention because we want to stress the need to seek solutions, from the correct office and at UC, and not to seek resolution independently. And this is what could happen. These are consequences of seeking resolution without consultation. So Dr. Pay Too High is supported by a sub-award from UCSF to the University of Madrid. The UCSF principal investigator wants Dr. Pay Too High to work on several projects in Mozambique and negotiates a salary with Dr. Pay Too High and tries to make arrangements to employ her. The UCSF principal investigator runs into problems with country requirements, with multiple work permits and different project employers, and tries to work through a professional employment organization, CIMS, thinking that UCSF can issue multiple subs to CIMS with Dr. Pay Too High as the principal investigator. The UCSF principal investigator later learns that the salary negotiated with Dr. Pay Too High far exceeds the salary that CIMS pays their employee. CIMS is unable to match the UCSF salary as it would create an equity imbalance. So as you read through this, can think about all the different consequences that the principal investigator thinks that will might hurt the principal investigator at UCSF. So let's take a look at some of these consequences on the next slide. So risk of trying to solve foreign contracting or employment without guidance from the International Research Support Office or from the Global Programs Office definitely, first and foremost, will create a delay in starting the project. So the projects in Mozambique, this problem's been ongoing, and it's been going on for 6 months, and it may go on for another year, trying to find resolution. there are project roadblocks due to country permit and employment requirements. Working within a country's laws, we have to be able to understand those laws and to see how we can redirect our principal investigator before making a decision. Financial loss, by far the biggest. The PI will need to cover the excess salary that she negotiated with Dr. Pay Too High. All negotiations should be conducted by the appropriate university authority and not by the principal investigator. And we should never be negotiating salary with a contractor. We should never be negotiating salary with a contractor. If first you need to find out what your agreement type is going to be. We should never start to work on a specific area of an agreement until we know what agreement we're going to use. So this is where the principal investigator would have been better off working with their administrative person and the international office, research support office, to discuss, where the person's going to be working, what the person will be doing, how we can get this person into the system without breaking any country laws and without additional cost to the university. So salary, again, as it must be negotiated in local currency, may create excess dollars lost for the UCSF principal investigator. Also, in this scenario, the difference in local currency does equal thousands of dollars, US dollars. So the principal investigator still does not have resolution, of course, and they're still working on how to get Dr. Pay Too High as key personnel in a UCSF project. So some of these things may take, an agreement to be negotiated, or these things can take to get, an agreement negotiated to hire somebody at the university, may take a year. It could take months to a year to finalize. So in this case, there's been extreme delay of the projects and also financial loss already experienced without even deciding what type of agreement we're going to use. So these are consequences of seeking resolution without guidance. It's always important to reach out. So in our case studies, we take a chance of violating foreign country laws. In all our case studies, we've taken that chance. So violation of country tax withholding and reporting requirements can result in fines and penalties, so financial loss, and in some countries, jail time. So we want to protect our principal investigators. Violation of country employment and labor laws can result in fines, penalties, and even criminal penalties. Violation of country entitlements, such as pensions, severance, leaves, can result in civil and criminal penalties. Violation of country visa and immigration laws can result in fines, penalties, deportation, and/or imprisonment. So we would be endangering a person. So what we want to do is make sure that we are clear on the correct classification and agreement type that we're working on. It's important during the proposal preparation, if at all possible, get a copy of that scope of work so that you can make a clear determination, get clarification, sit down and discuss with the principal investigator, get clarification on the language used in the scope of work. Also, consult with the International Research Support Office to make sure you've covered all the different laws in the country that we will be contracting in or that we will be hiring in. You want to, this will help you to make the determination, because eventually what will happen is you may need to redirect your principal investigator to modify the agreement type. So clear understanding, and URSO can help you get that clear understanding, will help to avoid noncompliance, not only with university policy, but with the laws of the country that we'll be working in. So if you go to the next slide, what we have here.
Joyce, sorry, I did want to add that sometimes international contractors may be incorrectly classified in a proposal, and once awarded, project teams may feel like they can move forward quickly. However, just because it's approved in the proposal does not necessarily mean that it is properly classified as an independent contractor. If it hasn't been run by URSO, or even if it has, because laws may change. So planning ahead, maybe and anticipating that there may be a change, and double checking after award.
Thank you, Gladys. That's very important. I'm sorry, I missed that. So here we have the process, how to process independent contractor agreements. I'm not going to go through all of it, but we place this matrix in here to use as a reference. So all of you can use this as a reference, a point of reference to go to when you know you're going to have to process an independent contractor agreement, especially in a foreign country. So we're going to move on to export control and restricted party screening. So as mentioned earlier, we do use visual compliance to screen other entities and individuals, and this reduces non-compliance with export controls and improper foreign government influence. If you are working, one thing I do stress is if you are working with an entity that's in a country that you've never worked with before. For instance, we did have somebody working with an entity in a country, Ukraine, and this was after the war broke up between Russia and Ukraine. During that time, what happened was there were no sanctions. There were very few sanctions or comprehensive sanctions in the Ukraine. But as soon as that war broke up, the United States issued 75 new sanctions. So it's always important to check with our export control officer, especially if you're working in a country where there's political action going on or activities going on, or if you're not familiar with a country. If you, comprehensive sanctions mean that we cannot work with that country. And that would be like Iran or Cuba, for instance. Those are two big ones. So it's always good to check to make sure that there are no sanctions against the country where your foreign entity is. And of course, be aware of countries where export control restrictions may be attached to them. So even when we're conducting fundamental research, which means, it's freedom of our research results, it may require an export control license just the same in the specific country. And that would be, you would have to go to our export control officer to do that. So there are additional resources for you here. Thank you, Cassie. Oops. Okay. And also there's an introduction to foreign corrupt practices act in the UC Learning Center that's available for you all to go through to learn more about export controls. So are we running this little snippet?
No, I think this is a 4-minute video about international collaborations, specifically related to export control, that we suggest you watch outside of today's session. Again, it's about 4 minutes, and the link will be in the PowerPoint, and it's also on the Office of Ethics and Compliance website, but it will be directly in the PowerPoint. It's a YouTube video.
We just want to go over some tips for working with international subrecipients. Know the foreign government policy. Do not assume the in-country policies are the same as the US. So we just want to make everybody aware that foreign governments have different laws. We want to make sure that you become aware of those laws. Where do you go? Go to the International Research Support Office to help you become familiar. Reach out for technical experts, to your technical experts for guidance, such as the International Research Support Office regarding international laws, and to contracts and grants accounting for invoicing. Plan up front to mitigate downstream issues such as project delays, unplanned additional costs, such as from penalties. We want to avoid things like that. So rather than making it happen, try to avoid it. Work with caution and also reach out for advice. Be ready to spend substantial time explaining the federal and sponsor policies to the subrecipient. And then read applicable rules and regulations every time, as they often change radically. And this includes sponsor, university, as well as the federal regulations. You want to make sure that you are aware that federal agencies implement the uniform guidance differently across the board. So you want to make sure that you have covered all of your bases before moving forward. So read everything. And Cassie, I'm going to turn this over to you.
Yeah, so thank you, Joyce, thank you, Gladys, and Philip and Shelby for all of your input, and also everyone else who had input today. I appreciate that. Now we've come to our discussion time, and I'm actually going to transfer over to Philip, but I want you to think about our learning objectives and see if you have questions that we could answer related to these objectives or something else that came up. The objectives were knowing the difference between cost reimbursable and fixed amount budgets, understanding the concept of cost sharing, knowing how to process indirect costs on foreign subs, and being aware of special considerations in working with international subrecipients. And now I'll turn it over to Philip.
Yeah, thanks, Cassie. I was going to see if anybody has any questions.
Tom has his hand up.
Hey. Tom does? Okay.
If
Sorry, let's see it.
Hey, no worries. So my question is related to cost sharing, and I'm hoping to understand a little bit more of the back end process, and like specifically when I'm completing an SRF, if I have, so I'm subbing out, we're sending money out to a sub site that's international, right? And they're doing voluntary committed cost sharing, let's say. So they've said, like, you know how that goes. So then I mark yes to cost sharing. And then I always ask them for like an expected cost sharing amount. And I always get a lot of pushback, and I've gotten questions from my PIs about like cost sharing agreements. And so I was curious, when we mark yes to cost sharing and we put the estimated cost sharing amount, after that, what happens? Are we just adding a specific term and condition within the sub award that details like essentially you guys need to update us on your cost sharing amounts on these dates, or how does that work?
Essentially, yes. We go ahead and indicate on the sub award that there is cost sharing and the amount. And so then on the controller's website, I don't have it handy right now, sorry, on their cost sharing website, they do have a link to a Excel spreadsheet, I believe it is, where the cost sharing gets captured, and then it's supposed to be entered into PeopleSoft itself. The CGA had an update to PeopleSoft earlier this year, I think it was, that included a spot where the cost sharing by the subrecipients can get added. So then this way, since the sub has committed it, and if it was put into the proposal and that was approved by the funding agency, it's now actually a term of the award. Now, they don't go through and add a term saying that there is voluntary committed cost sharing, but because there is the voluntary committed cost sharing, and that was what proved, that's become a term of the award. So it's something that has to be fulfilled on the reporting side. And so it gets captured in CGA. CGA will then know about it. It can ask about it so that when the sub is finished, we can ask, was the cost sharing commitment satisfied? Yes or no? And if not, why not? And all that and things like that. Oh, thank you so much, Cassie, for putting it on there. That's kind of like what happens on the back end. I don't know really all of the details and specifics about it either, but it's just, at least on our end, what we're looking for is anytime, especially on federal awards, when some investigators are providing effort but not drawing salary. Why is that? That is voluntary committed cost sharing potentially. Sometimes there are reasons for it, and that should be clearly notated on the SRF and in the proposal record and in other places as well. So just in case it gets audited, we have that backup documentation.
Got you. Thank you.
Shelby, did you want to add to that?
Just a little bit. I would just say that I think collectively we've noticed that it's an opportunity when there's cost share, voluntary cost share added. It's a real opportunity to connect with the PI and help them understand it's not the best thing to do. It's not really typically once they understand the administrative burden, they don't want to do it, but they don't understand that sometimes, not always, but we do find it to be an opportunity to connect with them, explain what it really involves and try to nudge them away from it. And in most cases, if we can do that, and once they understand, they're happy to not do it.
And then thank you for that, Shelby. It's actually a really good point. It kind of leads into my next thought was that, a lot of times our international partners don't actually understand the federal rules. We often hear from them, I know we mentioned in the presentation that like the UN says they're not subject to it. Some of our foreign partners say that as well. They'll be like, well, I'm based in Canada and we're not subject to the federal regulations. And that's actually not true. It's the regulations follow the funding. And since they're receiving that funding, they are still subject to it. And so they don't quite get, and this may be like a difference of practice at their institution. We've had some say, oh, we just don't want to pay for the PI salary. So I guess we're going to cost share that. And it's not necessarily an institutional policy. They just don't want to go through the process of charging effort to the grant and collecting that salary. So, sometimes it's having a conversation with the subsite to find out what is going on, what they think they need to do. Because sometimes what they think they need to do isn't always what they actually need to do.
Thanks. I do have a follow-up question if no one else has one.
Yeah, go ahead, Tom.
All right. So we were saying that for vendor contracts versus subawards, basically it sounds like vendor contracts, we don't need to worry about conversions into US dollars, but for subawards we do. I didn't see, is that a federal policy or is that a UC policy? And like do I find that in the grants management handbook for NIH, or is that more of like a UC policy thing?
I'm trying to figure out, can you explain a little bit more? I'm trying to.
Yeah. I remember during Cassie's portion of the presentation, it was something like for a vendor for a vendor agreement, we don't need to worry about conversion to US dollars, but for subawards, we have to mandate, it has to be converted into US dollars, something like that.
Tom, are you asking also about your responsibilities with this? Just curious. I just want to.
No, I'm just curious. Okay. I'm just asking in general about that
and
just where the policy comes from or what the logic is behind it.
I can at least say for the subs, we have to pay in US dollars. That's how it all gets, let me rephrase that. The grant is in US dollars from the federal agency. So we have to report back to them in US dollars. And so that's why we ask on the subaward invoices that they put down the conversion rate that they're using. And that's on that international sub-invoice template. Actually, CGA put that together based on some of their reviews and things like that. They've added a spot for the currency conversion. What is the rate used? And if I remember correctly, I think it's the average for that month is the best practice. And so that number gets put on there. So then we know what rate that they're using when they do the conversion into US dollars, because we can't, no one can realize a profit from federal assistance. And so if the conversion is too high, is one, the conversion leads to them receiving more funds, that has to be reported to us. Even an underpayment needs to be reported so we can try to make whole, but you can't get more money than you used. Does that make sense?
And I just put the slide you were talking about here. And I don't know if Joyce or even Gladys want to comment more on this. I think they might know a little more than I do about it. But this is talking about costs being paid to the contractor in local currency and not tied to the US dollars, because purchasing is considered an in-country cost. And when you're doing contractor negotiation, agreements, the professional services fees should be in their local currency, is where the discussion should start. And I don't know if Gladys or Joyce want to comment more on that. I think Philip really covered the subaward piece.
Yeah, I don't know if Gladys.
Contractors in foreign locations, and in particular, if they're being paid out of global programs offices or through a PEO firm, the requirement is to pay their salaries in local currency. That way there isn't currency fluctuation for them.
Okay.
But then, yes, Karen, on the proposal, it's all in US dollars.
Well, we're at 10:59. So if you have another question, maybe put it into chat. Or Philip, do you have anything else you would like to say?
No, I think that's it. Thank you, everybody, for coming. If you have follow-on questions, feel free to reach out to the central email box. Someone on the team will get back to you. But yeah, if you have questions while putting together the SRF, please feel free to reach out during that time. Sometimes it's easier to have the conversations before the request comes in, so that we can also help guide you on how to put together the request.
This is, again, optional, and it's really just to test your knowledge on submitting that SRF to see if you might want to take the e-course again. I'm not going to share the answers, though, because I don't want you to see them, but you'll see them in the PDF I share of today's class. And at the end, we have all kinds of resources for you, all of the things we've talked about today and more. So you'll see those.
Cassie, I did want to pitch an ERSO event. Tomorrow we're having a Global Programs Forum in Kenya, and they're covering international hiring. So it will cover the processes of international hiring in Kenya and the requirements, the legal requirements. It will also cover international contracting in Kenya. It's helpful. International hiring is a big risk for every organization. There's a high risk of being sued for labor law violations. So I encourage everybody to, who's interested or who's hiring in Kenya, to participate. And I can forward the invite if you let me know.
Yeah, please. I think that would be good. I think if you could forward that, that'd be great, Gladys. And also, you'll see when you get the PDF, there's a survey link. Feel free to let us know how we did today. If I can get it up again, I'll paste it in here for you. But thank you, everybody. I don't know if any of my colleagues want to say anything else, but I think today's formal presentation is complete.